Okay, good afternoon, ladies and gents. Hope you're all well. Hope you're ready for another action-packed session. And you might be looking at this chart and thinking, well, what is this? And this is the Australian dollar versus the US dollar. And the reason I'm showing you this is because we've had some pretty surprising and quite amazing news overnight. Australia have raised their interest rates. They're the first G20 nation to do so. Um, don't get me wrong. They were always, they were widely expected to be the first country to raise interest rates, just not quite so soon. So it's actually quite surprising. We were expecting it really more start of next year, but they've done it overnight. So they've raised their rates from what was a 49-year low at 3%, and they've raised it by 25 basis points to 3.25%. And as you can see, the Aussie dollar has spiked higher and made new highs for the year against the US dollar. So big movement in the currencies. The Australian dollar versus all currencies has strengthened overnight. So this is the the major news that we've seen. And if I bring you on to the S&P, so this is an hour chart, and you can see we've powered higher overnight, and this is being seen as good news. This is being seen as the economic recovery process is continuing. And stocks are higher, quite a lot higher. So the high of the day is up at 1047. We've broken above the 50% Fibonacci line that I've got on this chart. That's coming in at 1044 basically. This is the series. I'm looking at the retracement from the high of the year a couple of weeks ago down to the lows that we saw last week down at 1012. The non-farm payrolls low. Okay, so that's the range I'm using for this Fibonacci series, and now we're over 50% retraced of that kind of 2-week downward trend that we'd seen. So this Australian interest rate hike, surprising news, but it's been taken as fairly positive in terms of the economic recovery process. To counterbalance this, we've had some pretty disappointing economic data out of the UK this morning. We've had the manufacturing production and also industrial production for August. Both were quite a lot worse than expected. The biggest actually month-on-month fall since January of this year. So not great data out of the UK this morning, but still stocks seem to have shrugged that off. I mean, the FTSE's higher by 80 points or so, I think it is. So that seems to have been ignored in favour of this Aussie interest rate hike and the positivity that's feeding through from that. The financial sector's pretty strong. Bank of America upgraded credit Agricole to a buy from neutral. We've had some comments from the Kuwaiti oil minister overnight. He's talking about the fact that they're expecting oil demand to pick up in 2010. He's pretty bullish on the demand side for next year, and they also said, just quashing rumours and speculation, he said that there's no plan to move away from the dollar pricing. So oil's been pretty bid this morning. We're up over $1 as I speak, trading 71.45. So the positivity that we were talking about yesterday morning definitely followed through. We had a bullish market yesterday, and we've certainly continued that this morning. So there's quite a good feeling out there still. Obviously, it's all about Q3 earnings coming up. We don't have any data at all today, actually, so no US economic data to give us any direction, but the trend is definitely upwards. We're retracing, and looking at this chart, from here there's not too many great resistance levels until we get up into the sort of 1060s, but We've got the Fibonacci 61.8 fib level at 1051.50. This kind of coincides almost with the R2 pivot level at 1050.50. So I would say that's our kind of target on the upside for the early part of the session if this trend continues higher. So the sort of 1050.50 to 1051.50 resistance zone, and then really above there isn't too much until we start to look at the highs from the 30th of September and then the highs from the 29th of September, okay, which are up at 1063.25 and 1065.80. So we're obviously quite a long way off there. So there's not too much by way of resistance levels now that we've got up through the levels that we passed yesterday. So I'm first of all, my immediate target if this trend continues is up at 1050.50 and 1051.50. On the downside, I mean, I can't see too much downside today, to be honest. I think the uptrend will continue. I think the initial reaction to this Australian interest rate hike seems to be positive. Whether or not that changes when the US markets fully get opened up remains to be seen, but I think it's a small interest rate hike, and I think it's going to be seen as fairly positive. So I think the mood is good. I see the trend continuing. I don't see there being too much volume today because the data calendar is empty, but we all know on light volume days we can get exaggerated moves, as we saw Monday last week. So we'll have to wait and see if this market gets any momentum, but certainly we're favouring the upside. We've got support coming in at that 50% Fibonacci level at 1043.75, which coincides nicely with the R1 pivot at 1043.50. So that's, the market's got to use that as a platform initially. If we can stay above there, then the trend may well continue on up to the next fib level. So let's see how we get on, guys. Have a good day.